Welcome to Real Vision Crypto and the Defiant's weekly crypto show. I'm Robin Schmidt, head of video and multimedia at the Defiant. Today, I'm joined by Ash Bennington, senior editor and crypto editor at Real Vision, and Camila Russo, chief S at the Defiant. There's been one big story on our radar this week, the Bitcoin Taproot upgrade. Camila, do you understand what's going on here? Can you guide us through it? I mean, I'm pretty sure I know what's going on here, but I'm curious if you were digging deep into this one.
Okay, so I think the main takeaways on why this is important is because it just increases and improves Bitcoin's capabilities across the board, from making it more scalable to making it more private to adding smart contracts. Those, like, each separate feature is by itself huge. Privacy, what it does is that it allows some transaction details to be hidden. And of course, in a public blockchain like Bitcoin, that's important because, as you know, anyone can go and see historically all of the details of every transaction and every action that any address has done, which is not ideal for most people transacting, and that could open up more, make it more viable for some people and specifically for some institutions to be transacting on the Bitcoin blockchain. It improves scalability because it uses something called Schnorr signatures.
Schnorr signatures, yes.
Yes.
Correct.
Okay, pronouncing it well. So that what it does is it packages data in a way that it makes transacting on Bitcoin less intensive data-wise. And finally, it opens the door for smart contracts. And as we know, the huge difference between Bitcoin and more newer blockchain networks such as Ethereum and even next generation blockchains like Solana, Avalanche, and so on, is the ability to process code.
The funny thing about this Taproot upgrade is it's the biggest upgrade since SegWit 2017. SegWit was a big deal. It was responsible for a massive pump, and a lot of the Bitcoin-derived networks, such as Litecoin, for instance, they also adopted SegWit, and it sort of promoted this idea that Bitcoin was genuinely upgradable to the point where it might be serviceable as a blockchain at scale for mainstream applications. The promise of that hasn't really been fulfilled. It's kind of continued to resort back to being this store of value asset. Bitcoin, digital gold. Ethereum, in its place, has taken on the role of the app-based, kind of much more flexible, much more interesting blockchain for developers to build on. But then if you say smart contracts on Bitcoin, of course, there's a ton of liquidity stacked in Bitcoin, the most value of any network. So if you can unlock that value, particularly in DeFi, for instance, it becomes incredibly interesting.
What's so clear to me is like how deep is that kind of smart contracts capability? Like, is it actually Turing complete? Do you know like how far that goes?
It's a bit of a meme. Let's be honest. So the privacy thing is a bit of a meme. The smart contract thing is a bit of a meme, and it's a great headline. The most interesting part of it is just being able to pack signatures down into a smaller size, which means you can pack more of them into a transaction, which means it should be cheaper to use Bitcoin. How much cheaper? I don't know. What tends to happen is as you increase the capacity, more people pile in and it just gets expensive again.
It's interesting to compare this to SegWit. For those who weren't around during the 2017 cycle, SegWit, segregated witness, was about segregating the signature component. This is something that was part of a larger theme called the blockchain scaling wars, the blockchain size wars. This is something that created a great deal of controversy in the space in 2017. It created a series of fragmented chains, meaning that there were actual forks where people split out the blockchain for Bitcoin, claiming that, for example, BSV, the blockchain Satoshi version, there were all of these sort of very controversial forks, very controversial schisms in the community back in 2017. So I guess the first question I have is, do you think that that's something that's a risk from Taproot that doesn't sound, based on the conversation that I've heard, to be something that's in play this time around?
I don't think it was controversial this time. It was three separate proposals that were merged together and passed, and generally seen to be in the best interest of the blockchain. The wars you're talking about previously were very much personality led. It was Craig Wright, it was Roger Ver, all basically espousing a different philosophy of Bitcoin, and all really trying to achieve the same thing, which is they believed fundamentally in Bitcoin as the most decentralized network, the most secure network, and therefore the more value you could push towards this, the better your support towards a true vision of decentralization. But of course, the market decides where it wants to go, and developers decide where they want to go, and where they wanted to go was Ethereum, because that's where all the action was. And then, of course, we had DeFi, and that exploded, a completely separate instance of financial innovation. What was very interesting with DeFi was that a lot of Bitcoin value moved to Ethereum via wrapped BTC. And what I want to know now is how much of that wrapped BTC will start to go back to its parent network, the original home base, to start taking advantage of what might be possible there. We don't know. That's the thing. We just don't know. And so this whole, it's private. You can, for instance, mask a Lightning Network transaction and make it look like a normal transaction. You can mask a multi-signature transaction and make it look like a normal transaction. But when we think about privacy, it's like genuine, true anonymity, the bane of the government. I don't think we have that on Bitcoin. That's not where we are yet.
Well, it's interesting, and it's a question that I wanted to ask Cami. Talking about the privacy aspect of the Taproot improvements, is this something that's going to increase in your view, the regulatory headwinds here in the United States? Obviously, we're talking about this a little bit. Governments, generally speaking, are concerned about privacy in financial transactions, particularly privacy that they don't have the ability to see through. The idea of not being able to do things like AML, KYC. I'm wondering if you think that's going to be a factor in terms of the regulatory component of what's happening in the space.
It could be, but honestly, I don't see that having a huge impact on how Bitcoin specifically is being regulated. I think Bitcoin has, for now, been kind of the most accepted and palatable crypto for regulators. You know, it's been offered in futures. There's now a Bitcoin futures ETF. It's been, you know, custodied by like big financial firms, and so I think it's the cryptocurrency that has made it to traditional finance, and you know, there's a lot of clarity around it. It's by the CFTC, it's seen as a commodity, and so on. So I think, you know, this upgrade, which makes it partially more private, and which, you know, who knows how long it'll take for it to be actually implemented, because that's another aspect of it. Right now, it's not, most transactions aren't using this upgrade. Like, it still needs to be adopted by most miners and most wallets and most Bitcoin applications. So it takes a while for all of that to happen. So I think regulators have like much tougher issues on their hands, like NFTs, like DeFi, like, you know, fundraising on like with decentralized exchanges and so on. So yeah, I don't think that they'll spend too much time on this upgrade, I think. You know, my guess.
Well, it does bring to light this notion that privacy is something that we shouldn't ask for or demand or be entitled to, that actually everything should be transparent. Blockchain sort of lures you into this feeling of security, that your money is yours, but actually everything's far more transparent and far more trackable on the blockchain than it is with just using regular cash. The government should be welcoming this. Privacy has been turned into a dirty word. It's associated with the dark web. It's associated with criminal underworld. Therefore, if you demand privacy, which I think as normal citizens in the world, we are entitled to some degree of privacy. When it comes to money, it seems that all disappears. And I'm not necessarily suggesting that the solutions to privacy, like Tornado Cash, for instance, are the answer, but there's such a small number of people that even understand how to use Tornado Cash. I don't see that as being a problem. What I see as being a problem is the word privacy itself. being turned into something which is negative by definition. And that is kind of problematic. And I think there is a flavor of privacy in which we can reveal X amount of data about ourselves without having to reveal the entire picture. And I think that is where we should be targeting everything. But the problem is that privacy's become binary, and it's not. It's a sliding scale in the same way that decentralization is. But the government, all the headlines, all the newspapers want privacy to be dark web, and it's just not. But I mean, it's going to be a long, hard battle to determine what is private and what can be private and what cannot. We experience this every day. We know that we're in a surveillance culture, and it's troubling.
Yeah, it's also the first time that many people outside the space are confronting these issues, thinking through, trying to understand the trade-offs and figuring out where we land. It's definitely going to be a process.
So Taproot has been interesting for me, primarily because it was an opportunity for the Bitcoin network to say, we're still relevant, and we still have a narrative that goes beyond store of value. I don't know how powerful that is in the face of everything else that we've seen this year and last year, particularly with the rise of DeFi. But if Bitcoin can be a player with all the value that's in that network and at all the major players on that network, then I think we all win. And DeFi in particular wins when Bitcoin is at the party. So that brings us to our next big story, which is a Bitcoin ETF being rejected. We had all the euphoria of Bitcoin ETFs being accepted, and now here's one that was rejected. Cami, can you talk us through why this one might have been rejected and why it was different from the one that was actually accepted in the first place?
So this Bitcoin ETF, it was the application was by Vanek, who it's a big firm who's is an asset manager and does different ETFs and funds. And their proposal was to have a spot based Bitcoin ETF. What that means is that instead of holding futures, like Bitcoin futures, which is a derivative of Bitcoin, it holds and tracks the value of actual Bitcoin. And so that was rejected. I believe the SEC just does not want to deal with having oversight of an instrument that directly holds cryptocurrency. I guess because that just kind of has them admitting that Bitcoin is actually a part of the regulated, legit financial system, and it doesn't want to do that. So instead, what it has allowed is an ETF that holds a derivative that's traded on the CME and exchanges, just like a gold derivative or an oil derivative, and doesn't look different from every other futures on U.S. exchanges. So that just it's easier to deal with for the SEC, because it's basically an ETF holding a traditional financial instrument. It's not actually saying, okay, this is cryptocurrency that we're regulating. So it's just easier for them. It's just like doing this dance, and it's like, okay, sure, like this a bit like the Bitcoin futures ETF holds futures, but the futures are of course tracking the spot. Like it's still going back to Bitcoin itself. So I don't know. To me, it's a bit ridiculous. Like all the problems that we're having seeing an actual, spot-based ETF. Like so many years after the first one was filed in 2013, we still can't have that. And I don't know. It's just ridiculous how slowly regulation is moving, and all these ridiculous workarounds that they're trying to do to not touch Bitcoin at all.
It's so interesting. The regulation always moves slower than the technology. I thought Cami made a very good point when she talked about this as a dance. SEC cited the inability of the issuer to maintain adequate surveillance for fraudulent or manipulative practices relative to the ETF. Sort of an interesting point to Cami's point. If you can already buy an ETF that tracks the futures, what exactly is the difference here? I think it does sort of seem like a dance. I guess the The fear might be that this is something that looks a little bit too mainstream, more people will dive in. It's really difficult to know. You don't really get clarity. You don't really get a great deal of granularity sometimes with these SEC statements, but it does sort of naturally beget this question here, which is, to what extent are U.S. regulators comfortable with Bitcoin becoming a mainstream asset? I guess we kind of got a little bit of an answer here. There's a line which, at least at the moment, they're unwilling to cross and unwilling to let retail investors move beyond.
And I mean, the fact that it's like that they're saying we don't know how to monitor whether it's being manipulated. I mean, what about traditional markets? I mean, those are much harder to track whether there's manipulation. As we've just talked, all the transactions on Bitcoin are public. Everything is public. It's exchanges. The wallets are public. You can see what they're doing. So to me, I mean, saying that is just like putting Bitcoin on this like bad boy basket, and like pretending that all other like traditional financial assets are just like sparkling clean, and that financial institutions never manipulate, and there's like perfect oversight on the market. No, that's ridiculous. It's I mean, to me, that's totally a very lame excuse.
Let's not sugarcoat it, though. There is plenty of evidence that suggests Bitcoin markets are manipulated.
Of course.
And there are reasons indeed to be suspicious. And when, most of the trading is done between Bitcoin and USDT, which is not a squeaky clean, squeaky white asset, I can understand why they'd be reticent. One of the things that comes up often is custody. How is physical Bitcoin being stored? I think that's an easy stick to beat them with. And I doubt very much that these applications hadn't considered that and put forward pretty plausible ways of doing that. And then another one is the pricing. How do we trust the pricing? How do we trust the oracles that are coming through? And I think that's one of the reasons they talk about manipulation, that those prices can be moved around. And like, if you spend any time tracking Bitcoin, it's a little bit suspect. Let's be honest.
Sure, but I mean, like, how different is it from traditional finance? Like, my point is, yes, there is manipulation, but it's much easier to spot than in a more opaque market.
Yeah, I mean, if anyone who's been following, for example, GameStop and AMC looks at these markets and thinks, there's no irregularities in trading that are happening there, it's an interesting point, certainly. And I think to Robin's point, the idea of physical custody of the underlying asset could be an issue here, certainly, and also one that would be mitigated by the ETFs around futures, where that's less of a concern. But I think you guys are both spot on this. There is this tendency to segregate out digital assets in a way that seems, at least on its surface, to hold them to a kind of higher standard that traditional markets might not be able to meet either.
Well, there's definitely a degree to which they can say Bitcoin is over there. And it's a different thing. It's a new thing. It demands new rules, and we should be circumspect about how we deal with it. And I think we had this discussion last week about stablecoins and how they leap over that fence and say, hello, we're here, and we are an existential threat to your coveted US dollar. That's where stuff gets really fun, because with CBDCs on the horizon, you have this real existential threat to cash as we know it. And like, there's been more drugs and smuggling and illegal activities done with cash and US dollars in particular than any other currency. It's a very interesting debate, and it's not one that we on our own can win. But you're starting to see more and more support around the place from, we had mayors saying they'll take their first 3 months paycheck in Bitcoin. This is getting real. It's getting genuinely real right now, and it's fascinating to see those tensions play out in real time.
There is this feeling or fear, I think, from U.S. Regulators that crypto is just like an inherent threat to the U.S. dollar, and I think that's where kind of all this comes from in the end. Just like all this this trying to keep crypto at bay as much as possible. Because there's this fear of, okay, what if it comes and just like replaces the dollar, like the instability that can cause. But I don't know. I think there is like the far bigger risk is for the U.S. to miss out on the opportunity to be at the center of this innovation and of this new kind of I don't know. We're in the midst of this new like technological revolution comparable to the industrial revolution. You know, we're in the crypto revolution, and the U.S. should want to be at the center of it. You know, otherwise, like it's not like all this regulation is not going to make crypto go away. It might make crypto go away from the U.S., but it'll be developed elsewhere. And of course, like U.S. competitors will take that opportunity and will take the chance to be the center of it. Of course, like thinking of China. So I think that's a far bigger threat. And in the end, you look at all these stable coins, what are they tracking? They're tracking US dollars, you know? So I think they're just being so narrow-minded, because in the end, you know, these stable coins are being backed in part by US dollars. What's going into all these DeFi lending platforms is US dollar derivatives. So I think, you know, hopefully they'll be more open-minded and see that, you know, if they embrace it, they have a lot more to gain than to lose.
Hey, can I ask both of you guys a question? In the conversation, we talked a bit about stable coins there. Do you both think that stable coins here in the US, backed by central bank CBDCs, central bank digital currencies, are now a fait accompli? In other words, is this something that's definitely going to happen here in the US? Are we definitely getting a Fed coin?
Well, I'll take that one first, because I think you're absolutely right that they are. And it's not because they are inevitable in the US, it's because China is already doing it. And therefore, if you want to protect the hegemony of the US dollar against, you know, the rise of the digital yuan, then you have to. The digital yuan has been rolled out in test phases over the course of the last year to extraordinary scale and is ramping up very, very rapidly indeed. And yeah, it's a real thing, and it's really happening. And I can only imagine that the US government will be responding in kind.
Yeah, I'd imagine that's the case as well. It's like, I mean, informally, I've seen just a lot of interest from like just organizations, like big organizations looking at CBDCs, and yeah, I think it's bound to happen. Though I don't know, I wonder how that will actually work and integrate with other cryptocurrencies. I'm a little bit scared of CBDCs, to be honest. Like we've been talking about privacy, and it just feels that if all of our bank account assets and value are part of this Fed chain and Fed coin, that I mean, that can get very kind of surveillance very fast. So I don't know. I don't know. I'm just like kind of concerned about how much interest there is on actually doing this and looking at this very seriously.
Well, you know what's interesting to me about CBDCs is that in many ways, CBDCs are the antithesis of everything that the cryptocurrency movement is about. They're highly centralized. They are totally trackable, and they're run by nation states. So it's interesting. I think people who are relatively new to the space, who don't follow it as closely as you guys do, may think of CBDCs as something that is sort of akin to the spirit of what's happening in the space right now, which is all about decentralization. It's a pretty huge sort of schism between the philosophy behind central bank digital currencies versus what we've seen, for example, in Bitcoin, in Ethereum, and in other coins in the space.
Well, it's a fair point, because I think one of the biggest messages that we try and put out there with DeFi, and everything else that we cover, is not that this is going to replace whatever it is that you know. It's simply to say there is an alternative. And it's hard enough to get people to think about money in different ways, to think about debt as not a set of handcuffs that tie you to problems for your entire life, but as a kind of an active, a positive position in which you can leverage capital. That's very, very hard to get there. And CBDCs do have quite a lot of advantages. They will save a lot of money in tax returns, for instance. They will generate money for the government, and they will be much more efficient. They also have identity baked into them from the start. Yeah. But of course, again, we're thinking about, well, what is a system that you are required to opt into without any choice when it's that scale? Deeply problematic. But again, like you said, fait accompli, I'm pretty certain that it is, yes. Because what other move does the government have, really?
Yeah, I mean, it seems like the only thing that's certain here is that the future represents change. The future represents greater digitization of the financial system, of commerce more generally. And it seems as though, as we think through the different paths that it's developing toward, that 5 years from now, 10 years from now, the world of commerce, the world of finance, the world of business is going to look very different than it does today.
Well, that's absolutely right. And what we've been talking about so far are assets and protocols which represent a threat. What is so fascinating is that NFTs, and then we talked about them last week, represent no threat at all. They are a thing that is sort of fun and interesting and a bit quirky, and it represents culture, or can do, and it can represent art. And there is really, if you talk about, for instance, we had this week a member of the Bored Ape Yacht Club who's got 4 apes, and he signed a deal with Universal Music Group to create a band called Kingship around these NFTs. Who's threatened by that? And yet this is a mechanism by which crypto and crypto ideas will vault into public consciousness. Jimmy Fallon bought an ape this week. Post Malone's bought an ape. You're like, hang on a second. We've been fighting this battle on the front of, the future of currency and everything else. But actually around the back, culture is just gently doing the work of helping people get interested in something they would never have thought about otherwise. And, we're talking about NFTs. Coinbase is about to launch an NFT marketplace. And Coinbase is significant because they tried to launch a lending platform, and the SEC shut them down quite aggressively and said, no, you can't do that. But they're not going to shut down their NFT platform. And Coinbase is significant because it's pretty much the primary mechanism by which people onboard and offboard into crypto at the moment. I mean, it probably shouldn't be because their fees are insane. But in terms of a user base, big time. 1 million people signed up for that NFT marketplace. Bang. 1 million users, you can do something with that. It's going to be big. I'm not sure how, but it is going to be big. Camila, do you have any thoughts on that one?
Well, I just like stepping back from the Coinbase and NFTs topic, and we have this headline that Brian Armstrong said NFTs could be bigger than all of crypto, which is huge. But I want to push back a little bit on your premise that NFTs aren't a threat, because I was so interested to see all the backlash against NFTs in like outside of our crypto enthusiastic bubble. I think it was last week that Discord said it wanted to do something with NFTs and have like an Ethereum login, and like that whole community just blew up, being like, no, you will not do this. And that's when you realize there's this huge gap between what we understand and are seeing with NFTs and crypto and what most people are still seeing, which is still a threat. It's this idea that they don't know what this is. They think it hurts the environment. They think it's some of the criticism I've read were saying the internet is this free space, and now you want to add like money to it and property to it. It's like this deranged capitalistic version of the web and so on. And I'm like, it's a complete opposite. Like NFTs are like allowing people, artists, creators to monetize their work, to organize their communities. It actually empowers you as a user of the internet. And it's like, how can you not see this? And, the environmental concerns, sure, I guess, but, like,
It's
all
temporary.
the
The
new
environmental concerns are
blockchains,
temporary.
all the new blockchains are going to proof of stake. And also, like, if you're worried about the environment, then just don't use Facebook at all. Don't use Discord. Like, all those servers are creating much higher environmental impact than Ethereum is. So
Yes.
I don't know. To me,
do the
it's
maths on your Netflix subscription, please, and then let's talk.
Exactly.
Yeah, it's so interesting, to pick up on some of the points that Cami just made. The idea of artists and creators. I mean, I think to me, the biggest shift that's happened with NFTs is when we go to crypto conferences, and I see Cami at these conferences. We physically are on the ground at these conferences. It's fascinating to me to see the new level of enthusiasm and diversity that NFTs have brought to the space. There are people who are incredibly passionate about the content, incredibly passionate about collecting the art. It's brought an infusion, at least in my view, in terms of what I've actually seen, just a level of energy to the space that didn't exist before. That said, look, there are definitely some potential headwinds here. Number one, valuations have risen very quickly, very dramatically. We don't really know what the natural valuations of these things are because there are no cash flows to value. It's very difficult to understand whether a Bored Ape is priced fairly or not, whatever that may or may not mean. Second, there are allegations of wash trading in the space, the idea that people effectively are selling NFTs back to themselves, running up the prices, and then selling them to third parties. To the extent that that's happening, we don't really know. It's difficult to get transparency in that space because, obviously this isn't something that's like exchange listed. So you can create wallets, you can effectively mechanize a way of doing these wash trades where it makes it very difficult to detect. Finally, from a regulatory standpoint, I don't think that NFTs are a zone that are completely free of risk. Now, in terms of the possession of intellectual property, that certainly seems more like a type of property than it would a security. But some of the features that we're seeing being developed in NFTs that spawn other NFTs, for example, look a little bit like an in-specie payment that you might see on a bond. I think there's certainly no reason to believe that NFTs will forever and always remain clear of, for example, being considered securities by SEC. After all, if it's an investment of money in a common enterprise with the expectation of profit from the efforts of others, that's what the Howey test says, and it's possible certainly that NFTs in the future could potentially come into conflict with it. So it's a fascinating space, I think, because you have these very powerful forces colliding against each other. The level of passion and enthusiasm for retail investors, which I think we all agree is a great thing in the sense that it's bringing new people into the space. I love NFTs. I think they're incredibly cool, but also there are definitely some potential risks there quivering on the horizon.
Regulators have been pretty clear that like fractionalized NFTs, for example, are securities. So yeah, I agree with that.
Well, it's interesting because an NFT can represent all manner of things. We're just covering this week Visa Finance, in which you have smart vaults, and you open up a smart vault, it's an NFT. You put your assets inside it, and then it's the vault that interacts with DeFi protocols and not your assets themselves. So it acts as a kind of digital condom for your digital assets. Could have put that better, but I didn't. But we all understand that there are significant risks attached with interacting with DeFi protocols, and this protects you from that, and it permissions your assets within it. That's an NFT. I mean, you go in and look at it on OpenSea, and it's nothing. It's just a thing, but that's still an NFT. An LP position on Uniswap is an NFT. So we have to be a little bit careful that we don't just blanket kind of turn everything into one of these. But you can't right-click save this. I've got another prop here. This is actually my Bored Ape, the real one, but in like painted canvas form. So I paid someone to actually paint it for me in IRL, so I could go on the Real Vision show and actually show it. But like, I don't really know what to make of this. I am deeply disturbed by how mainstream it is and how memey it is. I don't want to name drop here, but this week I got to speak to Ice Cube, as in the Ice Cube from NWA, talking specifically about censorship, about being defiant, about speaking up for things. And like just hearing him talk about what it was like 1989 to say the things that he was saying, to be shut down the way he was, And then to come through that and be who he is now, I don't know if it's fair to make a comparison, but there's certainly degrees to which, you know, the barriers that are being put up in front of us feel like, and you know, established entities under threat in the same way that they did for him. And the only reason I made the comparison is we're talking about culture and the ability of culture to penetrate through and awake interest in young people who are then going to take this on and make it their own. And I kind of feel like the same thing is happening, but I when I see Post Malone with an ape and I see Jimmy Fallon with an ape, I'm like, is it gone too fast? I don't know. I don't know. Certainly exciting. Well, that seems like a good place to wrap it up. I'm literally surrounded by NFTs. I love these things. It's awakened in me a sense of just like collecting again. We traded ownership for access through streaming platforms, and now I'm starting to collect stuff again, and my wife hates it, but I love it. And I feel like, you know, there are these artifacts that are going to define this moment in time, and I'm really proud to own some of them, genuinely. I know, Camila, you've got some NFTs as well. Do you feel that way about them, or is it like, yeah, whatever, this week I'm going to be World of Women and this week I'm going to be, you know, whatever?
No, I also think it's awesome. Like I really enjoy them. I think I don't own as many as you, and I think there are very few people who do. But yeah, no, I think it's fun. I like the community aspect of it. I think it's interesting. It's kind of whimsical. I like their design. Yeah, I like kind of the people behind it. I like kind of supporting creators as well. Yeah, definitely looking for more NFT art for the office. And I think you're right. I don't know how NFTs will develop. I'm pretty sure like the NFT space will look very different from what it looks like today in the future. But I mean, there's no doubt that we are living in this kind of very special, maybe even historic moment in crypto history with what's going on with NFT. Like it's just been an absolute avalanche and explosion of creativity and innovation and just art and craziness with the space. And I think we'll look back and we'll definitely be saying, hey, remember the NFT boom of 2021? And then, yeah, you'll have like all your little kind of NFTs and like props and stuff to remember this time. So yeah, no, 100% with you. It's very special.
Ash, have you got plans to do an NFT at Real Vision, like a membership token or something like that?
Robin, if I knew the answer to that question, I wouldn't be able to do it to answer it on the show. But let me just say this to Cammy's point, because I think it's such an important one. I think that it's really version 0.1 that we're looking at here. It's just so incredibly early in the space. And I think when we look back on this, the sort of the infusion of art and craziness and just weirdness in the space, I think it's just nothing but a good thing. It's incredibly cool. It's incredibly fun. It's bringing new people into the space. It's creating more interest in it in a way that, you know, conversations, for example, about liquidity pools just don't seem to have the same resonance for people who come from an arts background, for people who come from a creative background. So I just think it's a really cool thing. And I'm not even sure we know what these things are yet. It's something that is going to continue to develop. And I'm just fascinated and thrilled to be able to watch it and to be able to hopefully participate.
Yeah, likewise. I think that there's nothing to be gained by taking things that already exist and porting them over to the blockchain. We've got to be prepared for the weird stuff and bold enough to go after the things that don't look quite right. But I think that's where all the risks come as well, and we have to somehow find a balance in between all of that. And hopefully the regulators, by acting tough, bring us back to the light somewhat. But I don't know. I think it's going to be a big sort of tussle of war, and you can take my Bitcoin, but you can never take my Aku. And on that note, it's probably a good moment to end. The light is fading, but it's definitely not fading on this partnership between the DeFi and Real Vision. Ash, it's been an absolute pleasure having you on the show. Camila, always a pleasure. It's been a Bitcoin Taproot week, a Bitcoin ETF fail week, and Coinbase NFTs. Thanks for joining us. We'll see you on the next one.